Investing in the stock market can be good, or it can be really bad if you don't know what you're doing. Let's jump in and learn a new strategy that you can use to invest in the stock market.
Are you a working professional but struggling to balance the workload of your career, family, obligations, and preparing for your financial future? If so, this podcast is for you. You've spent years learning your craft, and now it's time to focus on your financial future. This podcast will teach you what you need to retire wealthy and happy. Let's dive in.
Welcome to the Retire Wealthy and Happy podcast. We created this podcast to provide financial tips and tricks to help you build up your passive income, and also provide methods that you can use to protect your wealth so that you can plan a better future for yourself and your family. We're grateful to have this podcast sponsored by Monument Real Estate Capital. Monument Real Estate Capital, helping you retire 10 years early through real estate investments. On today's episode, we're excited to have Chris Vermeulen with us. He will share a different way of investing that doesn't use diversification or the buy and hold method. He believes that investing should be about capital preservation first and growth second. Chris is the founder of Technical Traders, an investment company that was started in 2008. He has over 25 years of investment experience and data working with over 20,000 self-directed investors. Chris is a very active trader in many aspects of the stock market. He also owns a few rental properties. He's a best-selling author. And when he's not working, he enjoys horseback riding, sailing, surfing, fishing, and inventing or building things. A brief overview of what we'll cover on today's episode. We're going to talk about should you invest in the stock market? And we're also going to talk about a different way to invest that Chris is the master of.
Chris, thank you for being on the show with us today.
Hey, thanks for having me, guys. It's a pleasure to be here.
Why don't you take a few minutes and give us a little background about how you got to where you are today?
Oh, where to start? All right. Well, we can go right back to, if we go right back to high school. I was 14 years old and I was big into flying remote control airplanes, building and flying. That's where I got my taste of kind of building things. And I started to get my pilot's license at 14. At the age of 16, I ended up getting my ultralight pilot's license and was able to fly around the countryside before I could legally even drive a car, which was pretty insane. And that was where it started, this whole side of the investing that I'm going to kind of share with you today, this different way to do things. It all started from becoming a pilot. And when you're a pilot, there's a checklist for everything. There's like your pre-inspection walk around the plane checklist, your taxi checklist, your pre-takeoff, your circuit, your landing. Like there's a checklist for everything. And I remember when it was the day for my solo. Of course, they don't tell you when it's your solo. You just show up and he's like, you're going up today on your own. And your body just goes into like the shock, right? And I knew it was coming. And here I am following the checklist, pull out the runway. I take off. And as soon as the wheels lift off the ground, it was a whole new experience. My heart's pounding. I was literally laughing and crying at the same time. I was so nervous, and I'm doing the circuits, and I didn't know what else to do. I was so nervous. I was singing like kids' elementary songs. I don't remember what they were, but little kids' songs, right? Out loud in the plane. And I was so nervous, and emotions had full control of me. And that was when I realized, oh my gosh, I have to get down. I have to do everything properly. He's listening to me on the radio when I do my calls. And so on my leg, I've got my checklist strapped to my leg. And when emotions were flying high, I just had to ground myself and put my finger on the checklist, look down and just, check, do this, carb heat, flaps, everything, get to the proper airspeed. And eventually I ended up coming down from that super exciting, nerve-wracking high, landed on the ground perfectly, ended up passing my flight test. And that was when it hit me. I'm like, oh my gosh, thank God for checklists, for systems, strategies like that are proven, and you just have to follow them. So when your emotions are streaming on a high or a low, if you just stick to a plan, a proven system, you can do really well. So that was like the first process, the first time I experienced like the power of a process, right? And then when I was 16, I ended up taking this stock market challenge in finance class in high school. And this was the kind of the next eye opener that got me tapped into the the financial space. And there was a stock market challenge. Our school had to compete against other schools. We were all given $100,000. Who could make the most money? And we made like $180,000 in a semester of fake money. But that was it. I was like, oh my gosh, I don't have to do anything but open a newspaper back then. You like look through the million lines and pick a stock, right? And so that was it. I'm like, I don't have to deal with people. I'm more so of an introvert. I don't need to be social and going out. I'm like, if I don't have to deal with people, if I don't have to go to work, if I don't have to talk to people, I could just sit at my computer silently and just, become rich. That's what's got me hooked. And it wasn't like a couple of weeks later, my dad had got this little booklet in the mail from Larry Williams. He's like one of the most famous and the most known technical traders when it comes to trading futures and the indexes. And I read this little booklet and I was like, oh my gosh, I could make $50,000 a month or a day trading futures. And of course, I asked my dad and he's like, no way, we're not touching that. He was big into real estate, had his own dental practice as well. And so that gave me kind of that little bit of a taste. And then fast forwarding, a few years later, I got into college and I turned 18 and I was old enough to open a brokerage account. So I put $2,000 in and I literally bought everything I had into Palm Pilot. Do you remember those little phones? The Palm Pilot had a pencil. They were like leading edge. I put $2,000 into it. I went away for holidays for 2 weeks to Florida and I came back not even doing anything. And I've got like $8,000 in there. And for a college kid, you're like, holy crap, like that's unbelievable. Sell, cash out. And I started using it to buy courses, taking seminars. I met a lot of traders, some of them who actually live in my town now, and we're still really good friends. It's incredible because I was taking college in the city in Toronto, which is about 2 hours away. And so I got into the markets. And right after that, my parents, we were really well off. My dad had 1,500 units, real estate units at one point across Canada. He retired really early. I'm trying to beat him to retirement, like full on retirement for his age. And he ended up retiring, but then he had a bad incident that happened and they ended up losing everything and having to go into bankruptcy. And so we went from like high on the hog, unbelievable lifestyle, you name it. It was great to going right to the bottom with nothing but literally our clothes and our furniture, no vehicle, no house, anything. And it was like a shocker. And my dad ended up having like epilepsy seizures from the stress and the lack of sleep. And I mean, it was scary. It was depressing. It was nerve-wracking, embarrassing for everyone. It was a terrible experience. And that was when I learned, oh my gosh, no matter how good your lifestyle is, how much money you have, it can all go sideways in a heartbeat. And it can do that out of control without any of your input if the bad things kind of align. And so that was my wake-up call of like, okay, I need to make sure I don't lose my money. I need to protect it. Number one, focus on protecting money and lifestyle, and the rest should all take care of itself. So that was my big wake-up call. And it was a few years after that I was taking all my money that I was making in the late 90s, early 2000s in the tech bubble and stock market, with the tech bubble burst. I was buying companies on fundamentals. They were growing like quarter after quarter, and the share prices fell and cut in half. And I was like, how can they fall? Like, this company is booming. It's doing better than everyone else. Yet I lost half of my account, or more than that, actually. And that was when it hit me. I'm like, okay, I can't do fundamentals. That is just people, it's just expectations of what they're going to do. And based on what they're doing now, I need to focus on price. Price is the only way any of us investors in real estate or stock market make money. Price has to go in favor that we're positioned. And so that brought me into technical trading. I learned about technical analysis, reading the price charts. And there's price charts that tell you that are bullish, meaning if you see this price chart, it's more likely to continue to go higher. And it can actually forecast how much higher it should go in what time frame, roughly. And if it has a negative pattern, that means people are nervous, they're dumping the shares, and the price should go down. So you either want to step aside or profit from the collapse or find a different asset. And so that was my kind of whole beginning circle. All this happened in a pretty much about a 5-6 year cycle. All those things happened. And you're looking back, like back then it was a nightmare. It was the worst things that could have ever happened to me. And then looking back now, it's like, if all those things didn't happen in that particular order, I wouldn't be where I am today. doing what I love, highly successful, financially free, helping others, doing what I absolutely love. I like the stock market, investing, real estate is like my passion. It's my hobby. It's my sport. It's my business. It's my lifestyle. And I absolutely love it. And so now, full circle, that's kind of where I am today. And now I'm trying to help as many people as possible avoid losing money, make as much as they can. It's all about creating systems that generate passive income. And so you can actually become wealthier in retirement is my whole focus. Most people retire and they start pinching pennies right away. As soon as they're done their job or they quit or they retire, they're like, well, if I take that holiday right now, I just retired, I might run out of money early. And as soon as people retire, they start pinching and it's like going and being in jail. It's like, you're scared to spend money. You work so hard. And so the strategy that I show, it's all about passive income and protecting capital. And people who are retired with wealth end up making more money in interest and earnings every year than they can even spend. They never even dip into their principal. That is my whole focus, so that you literally have money to burn. You can help other people around the world, which I love doing. And we'll probably touch on all that stuff, but that's like the full circle of what I do. I don't believe in risking capital. I don't like fast moving stuff. You won't catch me trading Bitcoin, any of that stuff. I'm all about, hey, if you got some wealth and you respect your lifestyle and you want to keep it, and I have a strategy that we can do that very safely. It's that's where I am today. I'm trying to preserve my lifestyle and share it with everybody else, kind of full circle across the board.
Hey, Roger, before we go on, can I throw in a question?
Sure.
So, Chris, this show is called Retire Wealthy and Happy, and you're going to share a lot of things about what people should be doing with the stock market, et cetera. But if you're willing to share any details about your father's experience, because that sounded like a terrible thing, but the question I want to ask is, there's something he could have done to prevent it.
Is there something he could have done to prevent it?
You said he went into
happened, and what is there something that could have been done?
Oh, for sure. I mean, there always is. Hindsight 2020, you look back. One of the big problems really for that particular situation was he got into an investment that when they took it over, they realized the books were cooked. Everything was done. The money had been stripped out of it. There was no money. They were in debt, millions. And literally once they got ownership, the other people vanished. And so, moving into a company that is ready to take off, is already doing really well, you take it over, you realize it's in debt. It actually is the worst company you've ever imagined. It loses money hand over fist. That was the problem. And sure, more due diligence, I think may have done that. So the problem was he got stuck with shysters, and it completely put him offside in a losing situation. And he fought for it for about 5 years, almost gave his life to it, gave up our financial freedom to try to save the company, and still didn't make it. I mean, I respect everything he's done. He always wants the best for everybody. And that's, I think, where I kind of get it myself, is seeing him. He helps everybody possible, and he'll always put himself in danger to try to make sure other people are good. So that was probably, he was obviously doing exceptionally well. He was already retired. This was like a new project to take on, and it just backfired. And maybe the string of huge success leads to maybe a little lack of maybe due diligence. I'm not sure. That's just speculative. I was much younger. I was a teenager. I was about 22 or so when this happened, I think. So I was pretty young. I wasn't into the nitty gritty, but it's just like the whole Bitcoin FX deal, right? Everybody's on a winning streak, and then all these big names go and they market it and they get paid and they fund it and they invest in it. These guys should be doing crazy due diligence to have that many people move in and nobody did anything. When you're living high on the hog, you sometimes might get a little lazy. You think things will be good. I can do it. I'll make it happen. But if you get in bed with the wrong people and get screwed, you can't always see those coming, right? So that was the major problem there.
Thank you for sharing that. That was very helpful.
Yeah, that's awesome. We also should mention that I got a little bit into my pilot's license. So I hit about 22 hours, and I did the whole solo part where we were doing the circuits around the airport. And the guy was like, "You're ready." I'm like, "No, I'm not." He's like, "No, you're going to do this." You just greased those touch and goes 3 times in a row. And I'm like, "Nope, I'm just not ready." And he's like, "Pull over, let me get out." And so I get up and I start to take off up into we were going counterclockwise. And then there was a plane that was going to go out the opposite end, and I freaked out. I lost it. I was like, hey, Sky Park area traffic, this is Cessna 757. You're going the wrong way. Sky Park. Yeah. And eventually I did a Mayday call, and I'm really embarrassed about that. But finally the instructor got on when he realized how bad I was freaking out. And he's like, don't worry. That's like a Corvette of the skies, and he'll be so long gone by the time you get around.
Right. Yeah. It is quite the experience. Yeah.
And then Ben's working on his pilot's license right now.
Nice. That's cool. I love everything flying. I actually invented the world's first flying electric jet surfboard. So I like anything that defies gravity or flies with wings. I love it. In fact, you can't see it, but whatever way this camera's angling, in the corner here, I have a 6 Degrees of Freedom flight simulator. Full VR. I have the wind kit. So as you pick up speed, the wind picks up. Has a vibration kit. I can fly every plane. Top Gun came out with a free download for Microsoft Flight Simulator. So I fly his jets. I can now grease the aircraft carrier, no problem. Took me about 50 tries. My son came in, did it on his first. I think it was probably his third or fourth real attempt. But I just love flying and all that stuff. So it's a passion.
That's really awesome. Cool. So what do you teach at the technicaltrader.com?
Yeah, so the Technical Trader, I mean, it's kind of a mix. So I try to teach people, I provide my trading strategy, my investment strategy. In that process, through daily or weekly updates, video updates, I try and teach them and get them in the right mindset of what to expect in the market. So I teach them the technicals from I would say it's a pretty detailed level. I don't give out like detailed courses, but if you watch the videos, you'll learn how the markets work. We talk about how they're all interacted together and what they mean. And so the big part about it is you get the signals in order to create that kind of passive income. And during that process, a lot of people have that transformation from being either a really active trader and realizing they don't need to day trade and trade options and stocks that are high flying. They kind of have that transition where they go, oh, I can actually be almost totally passive and generate bigger returns and not have to do all that active trading. And so what I'm trying to teach them is a different mindset, a different way to view the markets, and to get rid of that old bias that people have. They think they need to trade a lot. They think they need to take high risk to make high returns, which is not the case. And then also there's the other spectrum of investors that are really passive, and they have advisors. They don't know much about the markets, and they don't want to go through like a bear market when the market sells off. If they have the buy and hold strategy, their account just falls in value, and they know there's a better way. And so those people are like, I don't know how to trade. I want to learn a little bit. I want it done for me, but I want to take advantage of this. So it's kind of teaching the really passive people that if you're a little active, you can play and move trade these cycles in the markets. And then the active people have to learn to slow down. Like over 90% of traders, active traders, lose money. So the more you trade, the higher the chance you are to lose money. It is just, the thing is, it's addicting. Trading, it is like a video game. It is like a casino. If you hit a couple really big, fluky, massive wins, you think you're good, but it always comes back to bite you. The worst thing you could do is have a huge win trying to pick a top or a bottom. And I've had those. My first trade was like $8,000 or $6,000 profit on my account for doing nothing. And that had me hooked. And then I had another really good trade several years later in a penny stock, a gold mining stock. And I made about $127,000 in like overnight. Wow. And I was just like, you end up losing it all doing the same strategy down the road, right? I gave it all back and then some. I hate penny stocks. I don't touch them anymore. They are total garbage if you actually value your wealth and you're not going to gamble it. But that's the way I see it anyway.
So besides doing just charts, guessing where the price will go, what else do you do for choosing a stock?
Yeah, so I only trade ETFs, which stand for exchange traded funds. So it's like buying a big basket. They're very low cost to hold. It's like a mutual fund, except for way more efficient. A mutual fund is a high cost. You pay like 1 to 2, sometimes even 2.5% a year to own it. An ETF is like 0.1%. It's nothing. And you can enter and exit an ETF intraday anytime you want, or as a mutual fund, you have to wait for the close and it gets executed the next day. So we use a lot of technicals. It's all based on price action, but we take all these different market analysis and we break it down to cycles, price trends, momentum, sentiment. Sentiment is a very big part of what we do. We like to look at what other assets and other sectors in the financial space are doing. So, for example, if people right now could be really excited about tech stocks, they're piling in the AI movement, but it's really just kind of a FOMO. Everybody feels like they're missing out on the next stock market run is starting. And so we can see what type of people are participating in this rally. And I don't think this is a real rally. I think this is a news-driven, emotional-driven rally. And then when things start to weaken, we actually see when the big money is rotating into defensive sectors like utilities and gold and other things like that. And when we see money flowing into those, that's a warning sign saying, the big funds are getting out of the leveraged stocks, the fast movers. They're getting defensive because they also see, the music coming to an end. So we bring all those things into play to identify what stocks or what ETFs that we own. And I just focus on the stock indexes like the SP 500 and the NASDAQ. I focus on TLT, which is the treasury bond, the 20-year treasury bond. And then we focus on the US dollar currency ETF and cash position. We just look at those kind of three core assets: equities, bonds, currency, and if none of them are favorable, cash. And those are the ones that are the most liquid. You can move as much money in and out as you want in literally a click of a button for a couple bucks with a broker. So we keep it really straightforward. I don't get into the nitty gritty of individual stocks ever with what I do anymore.
So you're saying that we're in a false bull market right now and it's still a bear market? Is that what you just said?
That's what it looks like. Yeah, for sure. That's it's kind of what I call it, like a stage 3 topping phase. There's multiple stages to the stock market. There's 4 stages, and every stage requires a bit different strategy, a different mindset. You need to mentally be prepared for the type of price action and the movement we're going to get. So that's what a lot of people don't understand is investing and trading is a mental game, but there are stages it goes through, just like the real estate market. You got the kind of boom bust cycles and in between kind of transition periods. And we're in a transition period right now where the market could end up having a very big correction, very similar to the 2008 crisis. That was a stage 4 decline, and the tech bubble was the other one. So what's coming potentially around the corner is going to be a huge financial reset again for pretty much all assets. And I think even real estate will get hit with it as well, which I think all this is a great opportunity. There's huge money to be made in a financial reset on both sides, the downside, and also once it does bottom, new long-term investments can be, positioned and create some amazing passive income for life if you can know when these cycles happen.
You mentioned the 4 stages. What are the 4 stages?
Right. So the first stage is called a stage 1 basing formation. So the market, it will be kind of flatlining, trading sideways and chopping around. I usually categorize this as a red zone, a danger zone. It's a time where sectors and different assets are kind of popping and dropping. There's no real predictability to it. The trend is sideways. So it's a time to ignore the markets or do your research and start preparing for when it starts a new uptrend. What are the best assets to get in for the next stage? So that brings us to stage 2, which is a bull market phase. This is what everybody loves. This is what we all dream of. And that's when assets go up in value and rally and huge opportunity. And then, of course, there's a stage 3, which is a topping phase. It's very volatile. Sectors, commodities, indexes all chop around. They have big corrections, just like we've seen over the past couple of years. And that is it's a long process. These processes for the stock market take years to unfold. And here we are in this stage 3, I think, topping phase. And when this comes to an end, this music comes to an end, potentially, later this year in 2023, when that stage 4 decline takes place, that is when there is a absolute massive disaster and when a lot of damage is done. And this is what's really important. In 2008 to 2009, which was a stage 4 decline. There was 6,500 suicides in the United States directly related to falling stock prices. And I've seen it in my family, how much a devastation that massive losses, lifestyle change can do, especially when it gets you off guard, when it totally hits you out of left field. And that's what these big bear markets, these stage 4 declines do to the masses. It is a dangerous, scary time. They go through all these emotional levels as it's declining. Right now, I think we're in a complacency stage. People are thinking, 2022 was a bear market. Things are stabilizing. Stocks are rallying. I'm getting positioned for a new bull market. But they're complacent. They don't realize this is just a pause, calm before the storm, more or less. And when the prices start to decline and go deeper and towards a stage 4, that's when they get anxiety. They're like, oh my gosh, is there another bear market starting? And then eventually it declines far enough. They have denial. They're like a doe in the headlights. They don't know what to do. They're down so much. They don't feel like they can get out anymore. Eventually it turns into like full on panic. Their lifestyle's changing, their retirement, their passive incomes, everything is just vanished. And it happens very quickly, in months in some cases. And then they go into capitulation, which is they can't take it anymore. They snap, they exit their positions, or they're forced to. They've lost their jobs, their businesses are going under because this is a recession. Things around the world are slowing. And then they end up out of the markets, huge losses and complete devastation. It does a lot of damage to relationships. I mean, this next phase, if people aren't prepared for it, it is an absolute disaster. And people getting overextended in positions with margin or loans. I mean, if they don't understand their positions, that they can't withdraw or sustain a drawdown or pay mortgages or rents or margin calls for their stock positions if prices keep falling, they're going to get absolutely hammered. And it's forced liquidation, which is what actually creates a lot of the collapse in the financial system, is brokers forcing the hand, saying, we liquidated a bunch of your positions today because you're on margin and you're out of money. And it's just this never-ending waterfall. So that's kind of the 4 stages, and then it goes into a stage 1, right when everybody has taken the hit, they're mentally beaten, they're financially broke. That's when the market puts in a bottom, and they become depressed. They're devastated. They're angry. They hate the markets. They never want to touch it again. It's just the cycle, and I've been through many of these cycles. And I'm trying to help people avoid this, because I do feel like something is coming, whether it comes now or in a few years. Eventually there will be another one, and it doesn't matter when it happens. We just have to follow the price trends and make sure our money is protected, and you'll be just fine. In fact, you'll be better than fine if you do things properly.
Thanks for that. What are the main elements that are affecting the stock market, and what's going to happen right now?
Yeah, I mean, right now AI is creating most of the big movement and a lot of the energy. All the money is flowing into growth in tech companies right now. They're skyrocketing. They're taking off. We've got interest rates potentially starting to top out, where they might not go much higher. There might be another rate increase or so. Obviously, it's affecting mortgages. We got mortgage rates went from so low to now it seems like they're so high, although it's really not that bad out of the norm when you look back over time. But people obviously always over leverage themselves. And if they ever have to renew their mortgage rates, it's going to be tough. In Canada, the average mortgage is about 3 years, and then you have to renew. So, once all these people who bought these $1.5 million homes saying, oh, it's no problem at 2%, mortgage rate, and they're going to get it at like a 6% now, they're going to be like, I got to sell. And of course, that's going to create liquidity of housing. And this is the same with the stock market in a way. And eventually, when things start to drop enough, they have to sell it. It's a bit different of a scenario, but same type of thing. It just creates bleeding in the market, forced liquidation. Supply becomes easily available. What was your question there again? It was just
the main elements that are affecting the stock market.
Right. Yeah. So I really think it's just, sentiment. It's just this late stages of a market. We're just kind of working through overall market participants, their mindset and their game plan. It just takes time for these to unfold. Again, I don't follow any news. If there's anything big happening, my 11-year-old son or my 13-year-old daughter will literally tell me, and they're the ones who fill me in because I haven't watched the news in probably 10 or 12 years, and none of that stuff matters to me. So when I just look at the price charts, I can tell you, momentum is stalling. This is like a false rally. It's just a few big stocks holding the entire market up. It is brittle. It is like a house of cards, and people need to be prepared for it.
Absolutely. What do you think will happen in the next, overall 5 years?
5 years. I mean, I think there's going to be a financial reset, and whatever they're going to say that is the cause. I mean, there's a tech bubble. They blamed it on tech. There was the financial crisis. They blame it on the banks, the mortgages. This one, they're probably going to blame it on COVID or, the government pushing out tons of money and low rates. Who knows? But I do think we're going to have some big financial reset. Assets are still at nosebleed pricing across the board. Doesn't matter what asset it is. I do think we'll have that reset. I think it's going to be an incredible opportunity. I talk about it with my followers all the time. I'm like, when this reset happens, if you preserve your capital or grow it as it happens, you're going to have lots of money to buy a real estate at a fair value that'll actually have a great positive cash flow. You're going to be able to buy stocks and dividend stocks that you love that are going to have huge dividends, and you can hold them for years. In 2009, I bought a Canadian ETF. It was a dividend ETF for utility stocks. It was paying 16% dividend. And I held it for about a year and a half. And I made that money. Plus, it doubled in value, the ETF on top of it. I wish I still had it. I cashed out because it was too exciting. And I actually ended up moving to a different space, more so into the precious metal miner space, which is a little more volatility, but a lot of opportunity. But there's going to be a lot of opportunity in this market in terms of where these assets are going.
Thank you.
Thanks for sharing that, Chris. And just a reminder to our listeners, the main topics of our episode today is, should you invest in the stock market, which Chris just shared a ton of insight on that. Chris, I feel like I'm at school in a good way, like I'm learning from the expert here on what you should do in the stock market. And we're also going to talk about a different way to invest. So we're going to get into that in just a second. And for our listeners, I also want to mention that if you're interested in learning how you could retire 10 years early, make sure to check out the free investor training on monumentrealestatecapital.com. So now we're going to jump into a different way to invest. And Chris talks about this quite a bit. It's a concept called asset revesting. And Chris, we're going to let you tell us what that means, because I don't think I could explain it to our listeners. So what is asset revesting?
Right. So asset revesting is a kind of a term that I'm coining here. It's different. So asset revesting is like giving power back to you, the investor, to take control of your assets and then reinvest those assets. And so, the old style way of doing it is like passive income, you set it off with an advisor, or you just park it in the markets forever. You have no control. It's like, I'm not a fan of letting fate just carry itself. I'm a fan of, if you have education, you've got skills and drive, you might as well drive that car and make it perform, not just park it there and hope and pray it goes up in value. So a lot of people don't have control over their financial situation. They park it, they leave it, or they actively trade it, and they really have no control over it. They think they do, and they think they're educated, but most people, again, lose money on both sides. And if you use asset revesting, it's stuck right in between those two styles of trading. So the average person says, hey, if you want to be an active trader or investor in the stock market, you need to be really active. And so what I do is very different. I'm like, no, you don't have to be active at all. You can actually be very, very passive. My whole philosophy is, how do we make the most money with the fewest trades, like positions, and have the lowest risk? And when you put all that together and you come to the strategy, so this strategy I've been doing this particular strategy I've been refining since 2001. It's when it really hit me during the tech bubble, when I started to dive into price cycles and analysis. This strategy is about 5 to 12 position changes in your portfolio a year. We only hold one asset at a time, so one ETF. We're either long the stock market, or we're long bonds, or we're long the US dollar index, or we're sitting in cash. We'll never have a diversified mix. We're not going to go hold stocks and bonds because they generally move at different times. And so all you're doing is when you diversify in the stock market, you're just spreading your money out like peanut butter. Some are going up, some are going down. You end up with a really crappy average return because you've always got ones falling in value, killing your really good ones. So AssetRevesting is all about only holding assets going up in value. And we focus on a time frame that allows us to avoid the annual market declines, the corrections, and to, in a lot of cases, profit from those because we'll move out of the stock market and we'll move into bonds or a currency play or even just an interest paying account. So as the market is falling, our account is still going up. And that is the real key is we don't hold on to the losers. I have no problem taking a loss, a small loss, and sitting on the sidelines versus watching a position fall. So AssetRevesting is holding assets going up in value based on technical analysis and position and risk management. Everything comes down to risk management. You need to know how much money to put in, and you need to know how to manage it and identify the trends. So if something starts to stall out or turn around, we want to make sure we step out and go look for something fresh and new that has a good pattern. And I do this with the ETFs specifically because anyone can trade them around the world, and it's a very straightforward. If you can buy a stock, you can buy an ETF, and so that's kind of it from a really high level. And yeah, that's how more or less we look at it.
Thank you for sharing that. I probably should have asked this earlier for our listeners. Can you explain just what simply technical analysis means when it comes to the stock market?
Yeah, good point. Okay, so technical analysis, I kind of touched on it earlier, but technical analysis is really straightforward. We're looking at the price charts, and technical analysis means we're looking for price. We look at the markets from a technical view, and we put indicators on there, like a moving average. We want to make sure price is moving up or down or sideways. We want to be able to identify those trends. And so a technical trader won't look at the fundamentals, the PE ratios. We won't look at any of that stuff. We could care less about the news. Just give us a price chart, and in seconds, in a flash, we can be like, okay, this is likely going to go in that direction for this amount of time. And we can kind of play that. So, for example, one of the most simple and basic indicators and strategies that you can use as a shorter term trader is the 20-day moving average. It's giving you the average price of any given asset over the past 20 days. If that moving average is sloping up and price is above it, then you most likely have a rising trend, and it's you want to make sure you're long that asset. That's from a very basic level. It's not quite that easy, but once you know the trend and the time frame that you're focusing on, trying to capture those waves in the market, then you just get positioned. And I like to look at the stock market like the ocean. I love to surf. I love to kiteboard. And think of you've got the ocean. You got the tide going up and the tide going down. So you need to step back and look at the big picture of the stock market. Are we in a bull market? Is the tide going up? Or is the tide going down and we're in a bear market and most stocks, the indexes are going down? If the indexes are going up, that's number one. We got to have a strategy that focuses on buying stocks and playing to the upside. If it's going down, we want to make sure we're stepping aside or finding another asset that is in something that the tide is going up in. And then, of course, we break it down into shorter time frames. When you drop down to a daily chart, we get really nice cycles in the market that last 30 days up to about 8 months. And we try to catch those waves. So you've got the tide going up and down, and then the stock market has these beautiful wave-like patterns. And if you're a surfer, you sit out there waiting for a set of waves. That is what we're waiting for with this strategy. We let all the noise and the news and the chop just pass us by. We sit there, we live life. And then when we see the set of waves coming, we look for which one we want to get on. How are we going to ride that and protect it? And then we catch those waves. And when they're just about to break or they're starting to break, boom, we kind of just stop the ride and we wait for the next set, look for the next wave to catch. So we try and catch those beautiful, perfect surfing waves, and we avoid all the other noise that most people get sucked up into and get chopped up as a trader. So it's not passive, it's not active. It's like just looking at a perfect beach with perfect sets rolling in every 3 to 5 minutes. Like those are what we're hitting. And when we don't have a set of waves, we are sitting in cash. We're actually in cash about 30 to 40% of the time. which blows people's mind. Like, how do you make money? I'm like, well, because we don't lose money. We're only in when a wave is going up and we're on it, and then we get out. And so we can sit in cash while the market is collapsing or making a lot of noise, and it's just dangerous. I don't believe in being involved in the markets if it's dangerous. We work too hard. It's too easy to lose your money, I have learned. So I would avoid dangerous times and wait for a set and then take advantage of it.
Chris, you're sharing a lot of... Roger, you got something?
Yeah, I wanted to say, I really love your wave analogy. Before you said that, I was thinking, so what he's doing is he's got 4 different escalators. He watches which one's going up, and then he gets on the escalator. If none of them are going up, he doesn't get on the escalator. And you're like, well, there's these beautiful waves, and you're out there surfing.
Yeah,
that's a better analogy. So, Chris, you're providing a ton of value for our listeners here. And with our restriction of time, we can only get the high level picture, right? So I want you to give a shout out to your company, the Technical Traders, and you're also an author of at least 2 books that I'm aware of. And I'm assuming those 3 pieces could definitely help people be more involved in this type of investing if they want to be, right?
Mm-hmm. Yeah. So, I mean, if we were to break it down and kind of cover what I do. So I have 2 books. One of them is called Technical Trading Mastery. So this is for somebody who wants to learn the nitty gritty of the stages, the waves in the markets, how to identify trends, things like that. For somebody who wants to be active and learn about the markets. The next one that I did is called AssetRevesting. And this is all about what we talked. We're looking for the tide. Is it going up or down? And then we look for the best set of waves and we hop on and ride those. It's like going to the best beach. Which way is the wind blowing? Let's go to that one. It's got the best break. So that is kind of from the high level. Those 2 books you can get on Amazon, depending if you want to learn the nitty gritty or you just want to figure out how to make the most money without having to do all the nitty gritty. Because what I do with the technicaltraders.com, so it's thetechnicaltraders.com, is I provide AssetRevesting newsletters where you can follow the signals. So I take all these trades, I share everything I do with subscribers, and you just would log into your brokerage account and copy exactly what I do. I'm buying 100% of my portfolio in this ETF tomorrow at the opening bell. Here's my stop price, meaning if it falls to this, you put it in with your broker, it'll automatically close the trade and get you out. So you don't have to be around the computer. If it hits a target, we give you the target prices and how much to sell at each target. So we're scaling out as the wave is, maturing and starting to get closer towards the end. And then we take it a notch further for the really passive investors who are like, this is way over my head. I wish I could do it, but I can't. We also provide auto trading. So if you've got a self-directed brokerage account, we can tap our system in and the broker will automatically execute our asset revesting strategy in your account, kind of hands-free on autopilot, passive. It's more or less passive investing, passive income. And the returns are phenomenal. The drawdowns are tiny. In terms of, just to touch on those, a lot of people don't know what a drawdown is, which blew my mind. This was only about a couple months ago. Even people who have been investing for 20, 30 years, they're like, I never really knew what a drawdown was. And a drawdown is the max value of your account. When the market goes against you, how much value does it go down in? So for example, in 2022, the stock market had a 24% drawdown for the average buy and hold investor. That is a huge, huge hit. And our strategy has a max drawdown of less than 6%, which is less than the stock market on any given, like on a high volatility day. So we provide a very, very low risk strategy, the asset revesting, because we're constantly either riding something up or sitting in cash. That is the key kind of barometer to realize how much risk you have. The buy and hold is about a 40%. You could lose 40% in like 6 months, or you could do something that actually protects your capital that is less than 6%. And that's the problem with the financial industry right now. Is everybody's stuck into the one size fits all. You just take a mix of stocks and bonds, you hold it forever, and it's not really a safe way. It's a very dangerous strategy for anybody who's close to retirement or in retirement. It's the worst thing you could possibly do, in my opinion. You're really risking life. 20 years of work could go out the window in a 6-month window. It's not worth it.
All great points there, Chris. Chris, investors sometimes have Stockholm Syndrome when it comes to like volatility and returns. Can you talk a little bit more about that?
Yeah, so I firmly believe investors have Stockholm Syndrome for a couple different reasons. First of all, they think there's 2 things. They think that high risk means high rewards, and you need to take high risk to get big rewards. That is a complete false reality. And I kind of explained that kind of as we were talking. You don't need to be holding the markets through that volatility. But the biggest Stockholm Syndrome people have, and this is what a lot of people don't fully grasp, is they think the buy and hold, they're convinced that it is just the best strategy long term. Don't try to time the market as the financial industry. They try to like put it down. If you're a technical trader, you're trying to time the market and predict. I mean, they make it sound so evil and not good. And they've brainwashed the general public to think that the buy and hold is just the best vanilla way long term. Just leave it, forget about it, you'll be okay. But it's not the reality. And a lot of investors think they're helping their advisors, saying, oh, I found this other company I want to buy some money, buy some of this in my portfolio. And I bought this, I want this one, get some of that. And all they're doing is feeding the fire of spreading their money into more risky assets and spreading just more peanut butter out. It is brutal. And that's the big problem is people think if they keep adding more stocks to their portfolio, that it's actually going to probably perform better. It's going to be more stable. But generally, when they help the whole buy and hold philosophy, adding in stocks that they like, those are usually really volatile. They're actually doing more damage in the long run. And it's the buy and hold is just been brainwashed into people to think that it is the way to go. And I am a firm believer it is one of the worst ways to go. But the problem is most people don't know what I know. So they don't really have a choice unless they can find something that can help them do it or do it for them. And that's why the financial industry is so lucky that they have this strategy where they just keep bringing money in and they like literally park it there. Like my 11-year-old son could say, oh, I'll put your money in the market and I'll leave it for the rest of my life and I'll take my fee off you. You ride the roller coaster and I'll make a living off of you. And if the financial industry just keeps bringing money in and parking it, it naturally keeps the stock market going up. And that way the financial industry keeps going up. The financial advisors don't have to do anything. They don't have to really adjust portfolios. I mean, the industry, I'm going to be writing a mini book on this because it's just such huge setup for the financial industry to keep doing really well while other people suffer and take all the risks. So that is like the false belief that so many people have, and they feel like they're cornered. It's the only option, but it's really not.
Chris, thank you for sharing that. In respect of your time, and I also think we're at a good point because I feel like you've teased enough information that somebody's like, I got to go talk to Chris. So I don't know if I want to go any further. Is there anything else that you think we should cover on this episode about asset revesting or anything about the stock market that you think is important?
I think we covered it all. I'd really just be repeating myself. I think assets are frothy across the board. I don't care what asset it is. I think almost everything is pretty frothy. I can't find much to do. In fact, I'm actually looking at doing some mortgages for some homes just because it's like a 6+% just for a year or two, because I think it's a great, easy way to generate some cash and have a physical asset if that person, were to default versus leaving it in the bank, which a bank could go bankrupt and I could lose it. That is my last resort. What do you do with all this cash? I don't want to keep dumping it into the markets. And just know that when there is a financial reset, if you've got fresh gunpowder, I mean, it is going to be life-changing for so many people to up their portfolio with lots of different assets that can be held for years, 5, 10, 20 years, that will generate cash flow. That's the key. It's all about having that passive cash flow to do whatever it is you want to do. And yeah, that's kind of the whole focus.
Thanks for sharing that, Chris.
That's awesome. Appreciate that. All right. Are we ready for the final four?
Let's do it.
All right, Chris, we have the 4 same questions that we ask everybody so we can get a range and influence and get to know what they're going to do and stuff like that. These 4 questions are, number 1, what is your favorite business book?
Oh, business book. So if I was looking through the lens of like an entrepreneur, I would say Play Bigger is one of the most exciting books that I've read in a long time. It is about category design, creating a new category in an industry, which is what I'm doing with AssetRevesting. I'm trying to create a category that is between the buy and hold and the active trader. So that is an eye-opening book. If you're an entrepreneur, you've got your own business, Play Bigger is, if you want to stand out and completely dominate a category, that was a pretty exciting book in terms of that regard.
That's awesome. I think I've heard of that once off of somebody else, another guest's favorite book. So now I really got to check it out. All right. What brings you happiness?
I would just say a happy, healthy family. I've got a wife, 2 kids. Just everybody staying happy and not having mental health issues. I swear COVID has done so much damage, and the media and the social media, the TikTok has ruined the world, YouTube shorts. I mean, it's so bad what kids have access to. So all I just want is for everybody to be happy. We have fun as a family. That's kind of my whole core thing. And is if we're all happy, life is good. And I love to invent stuff. I love building, tinkering. That's kind of, I love to put my brain to work. How can I do something that's totally new and see if I can build it? I've got my own little kind of machine shop. So I build and create all my own stuff. And it's pretty awesome.
What's the coolest thing you've built?
The coolest thing would be the flying jet surfboard, which believe it or not, I saw something similar to it, and it was with a big propeller. It was like, riding it's called an e-foil is kind of the category of product, but it had a propeller on it. And I'm not riding a surfboard with a propeller. I've been in the boat. I have a boat. We live on the water here. It won't catch me playing around a propeller. So I'm like, I want to invent a jet powered flying surfboard. So, and in Canada, you're not allowed a propeller driven surfboard. It's illegal because they're dangerous. In the States, you can do it. They have very lax rules in the States. So I contacted Transport Canada, which is our kind of regulatory body here. And I said, what do I need to do? And so we went through it. And so I ended up creating a jet powered electric surfboard that you can't get your finger in or your toe in to chop it off if you tried. It's a pretty cool design. And I ended up going on my treadmill. I took a course on my treadmill to stay in shape, all about patents. And I learned all about patents, and I got a patent for it almost as quick as you can possibly do it. It was just over 4 months, like 4 months and 3 days. We submitted the patent, we got it back, and now I've licensed it off to an Australian company who's still working on bringing it to production, which is really exciting. But I'm working on a new project, which is a massive, I just got a welder, and it's a massive like anti-aircraft water gun. So think of a massive tripod. It swings around. It's huge. It's got triggers, and it's got a massive water cannon on it. And when you pull it, it goes. Think of something that shoots like 250 feet, massive water cannon, and you can put it on the dock, and it's just, what kid doesn't want a giant machine gun that literally the recoil on it is huge. Just the whole dock shakes, and it's just, you can ping off like paddle boarders. Not that you'd want to hit them; they would hurt. But we're just trying to make this awesome water cannon for cottages, just because it's just so much fun. Like I'm a big kid. I want to make cool toys, have fun. So
they both sound amazing.
That's awesome. We could probably go down that and keep talking about the surfboard for a while, but let's keep moving. Number 3, describe what your future retirement looks like.
Yeah, I would say future retirement is more travel. I work from home, got everything from here. So during the winter months, definitely want to go travel more. We did Scotland, UK earlier. I'd like to go just do a lot more traveling. I want to take my kids and go do more as well. Other than that, I mean, life is pretty good. I'd like to just do more bucket list trips. I want to go on like a survival trip where I go with myself or my buddy, and we literally just go in the middle of nowhere, northern Canada, and survive for a week or two, build our shelter, kill our own food, squirrels, you name it, whatever we have to eat, worms if we can't find food. I want to do just one of those survivals. I grew up in the country, hunting, shooting, building forts. I used to play professional paintball. So I have my own paintball field on my property when I was growing up. And so that's, just more bucket list stuff. And I want to go to Australia and go gold metal detecting. I metal detect here. I've got I love doing that kind of stuff. So I just want to do more bucket list stuff. And that's the whole point of the strategy that I've developed. And same with real estate is it's so passive. It's, I can technically be done around 9:00 in the morning, and I can go do whatever I want. Like right after this, I'm taking the kids tubing. All the kids are over, and it's like a full day in the sun, summer fun. So that's the whole point, is just living life, keeping everybody happy, and just more of it.
That's awesome.
That's awesome. What do you think is the best way to give back?
I do a lot of charity work. We put on Technical Traders and myself and my right-hand lady, Ashley, we help do charities, local charities. We had our Technical Traders. We raised over $19,000 in November for a kids mental youth fundraiser. We were actually the biggest fundraiser in Canada for this particular campaign. And it was a polar dip challenge. So we had to go into the icy cold waters, and we had the biggest team. We raised the most money, and we stayed in the water for like 4 minutes longer than the next longest person. I came out almost blue. It was pretty dangerous. But once you're numb, you can stay in as long as you want. But so we do a lot of that, and I want to do more of it. Like ideally, as I mentioned at the very beginning, once I hit a certain goal threshold target, I'm really going for my net worth. I want of millions a year in just interest and earnings that you can just burn more or less. And I want to do more charity work. I want to give back. I want to help other people. That's been my passion. And I've been accumulating tools, machines, 3D printers, CNC machines, and I've got a bunch of other friends who have stuff as well. And my plan is over the next couple of years is to open up an entrepreneurial startup. What would it be? Like a workshop where kids or anybody really with an idea or they want to learn about business and entrepreneurship, we just come in. It's like a club. You just pay like a small monthly fee. Anybody can come in. Everybody's got different skill sets. So if you need something catted up to 3D print the part to try and make your product or a part of your product, you just come in and you can use all the machines and make your stuff. So I want to have like my own little maker space. I live in a town. It was voted Canada's #1 entrepreneur town. It's a small town. It's only about, I think it's 16,000 people. But we've got lots of entrepreneurs. It's called a magnetic town. People naturally want to come here. And I want to just help kids or anybody, but I like kids. I really want to help teens. I mentor some teens now and some people in their 20s so they can be able to reach retirement and live the lifestyle they want, kind of like I did. I mean, I hit my goals when I was 27 years old. I made a dream board in college, put it on my wall, and I hit my dream board. Everything on that dream board, other than a massive yacht, but I'm not a big yachter. I think that was my roommate's. I'm a sailor. I have a sailboat. I grew up on sailboats. I do have a couple of jet skis, and I have a sailboat now. But it's amazing when you have that focus and you reach all those goals and you love every day. Like I love getting up and doing my stock market video for members every morning, like who want to be active. I just absolutely love it. And so I'm trying to help other people do the same thing, find their passion, where does their brain fit into this world? What do they do naturally that just they enjoy doing? And it's not even work. And so that's what I want to do. I just want to have a cool club of people like that, right? And we all hang out and just go there in the evenings or the mornings. And usually the early mornings are where you'll find me and other cool people, because we seem to all get up at like 4 or 5 too excited to do stuff. We can't wait. So it's pretty good.
That's awesome. Thank you so much. Where can our listeners find you online?
Yeah, they can go to thetechnicaltraders.com. So 3 words, The Technical Traders.
All right. Any social media or not?
Yeah, we got them all. I don't really do it. I have a social guy who kind of posts our content. It's kind of time consuming, so I don't search me, you'll find me.
We've got them though, and we'll have them in our show notes for everybody. So we'll throw them up there for you, Chris. Just as a summary for our listeners, on today's episode, we were talking about whether or not you should invest in the stock market and what is happening in the stock market right now. And we also talked about Chris' method of a different way to invest, which is called AssetRevesting. He's got a great book and also some other information online that you can take a look at that and try to apply it to your own investing strategy. Chris, we want to thank you for being on the show today. And thanks everybody for joining us on the Retire Wealthy and Happy podcast. We hope to see you next time. Thanks, Chris.
Thanks, Ben. Thanks, Roger. It was a pleasure. A lot of fun.
Thanks, Chris. We'll see you next time.
Hope you got value from this episode. And if you have a minute, then take the time to leave an honest written review for the podcast, because we take those reviews seriously and it'll help us serve you better on the next episodes. And most importantly, be sure to start taking action so you can control your financial future today.